Hey everybody, I hope you guys have had a wonderful February, and I know for our West Coast clients we've had a pretty mild winter, but for the center of the country and our southern clients, I know it's been really cold. I hope everybody's warming up and doing well. As far as the market, definitely is also continued to warm up. Had a little bit of a downdraft at the end of January, and then February has continued to be really strong. One of the things that we continue to see is a rotation. Basically, those high-flying technology stocks, the Amazons, the Googles, the Apples, they've started to slow down the pace, maybe even have a little bit of a pullback, and you've seen a rotation of that money go over into some of the areas like oil or financials, banks, and healthcare. So it's basically been the companies that were originally kind of affected by the pandemic and didn't look like they had a real bright future. Now that things are starting to repair themselves, are definitely performing better, and so you're starting to see a rotation of that money from kind of growth into value. And so something that we continue to watch. The other interesting characteristic that we're seeing is the small caps or the small companies, a lot of times referred to as the Russell 2000. That index is actually up 14% for this year so far, compared to the S&P 500, which is only up a little over 4%. So some people might ask, what does that mean? And a lot of times when the small companies or small cap stocks do well, that is an indication that this is the start of an economic cycle. And that usually means that things can continue on for, or a rally will continue for the next few quarters. And so we're definitely looking for the market to continue to improve. Doesn't mean there won't be some stumbling blocks or some roadblocks along the way. And one of those things that we're watching for is the climbing of interest rates. You've seen the 10-year way back in the middle of the pandemic go from 0.5 or 0.5% up to about 0.9 at the end of the year. So far this year we've went from 0.9 all the way up to 1.38. So we've really seen a very steepened yield curve. And one of the things that always have to remember is the Federal Reserve keeps short-term rates under control, and they've kept those very low, and all indications are they're going to keep them as low as they can for as long as they can. But the market controls the longer-term rates, and so what we've seen is long-term rates have now continued to climb as people have worried that there are some inflationary fears out there. And that's one thing that a steepening yield curve indicates, is that inflation can be around the corner. It also usually indicates that the economy will do well over the next few quarters. So once again, just another positive sign for the economy, but some warning signals when it comes to inflation. A couple of the other areas that we're looking at when it comes to inflation is oil prices. Back at the beginning of this year, oil was around $40 a barrel, a little higher. Now we're up over $60 a barrel. Great article today in the Wall Street Journal showing that lumber has gone from $500 a board foot to over $1,000 a board foot in just the last few weeks. So we're really seeing signs that the commodities that kind of make society move along, build houses, build roads, power cars and planes, continue to increase in price. The one area that we continue to watch for is to see if wages start to have inflation. If we start getting wage inflation, that's another really strong sign that inflation is with us. And if those things all continue, what it means is the Federal Reserve will have to start raising rates sooner than what they think, and that could actually be negative for the market. As most of our clients know, we have been already the end of last year starting to make some adjustments for what we thought would be higher rates, and now we're continuing to make more and more adjustments for what we think will be more inflationary pressures at the end of 2021 and into 2022. Really, that kind of is the market in a nutshell. We definitely are going to continue to just watch and see how the increase in interest rates and increase in inflation affects things over the next couple of quarters. As we go into tax season, if you guys are missing any tax information, or if your CPA or tax advisor needs any assistance, please don't hesitate to reach out to us and let us get any information that you may need. Other than that, hope everybody has a wonderful day and look forward to speaking with you next month. Thank you.